Welcome to the Probate Nation. My name is Richard Ruddy. People are living longer thanks to good health and healthy lifestyles. But as we age, not everyone remains as sharp as they were earlier in their life. And frequently a loved one, a son or a daughter, is called upon as a court-appointed conservator to handle the finances of an elderly parent. As a court-appointed conservator, your administration of these finances is overseen and audited by a local Commissioner of Accounts. And your initial filing with the Commissioner is an inventory of all the assets under your control and income you are entitled to receive for your parent. Our show tonight will get into the details of what you need to report on the inventory as you begin the Living Probate train ride. With us tonight is a professional who helps conservators prepare and file this inventory. He will guide us through each line on the inventory form, so all of you new court-appointed conservators, get out your pencils to take notes as we have a hands-on work session. Our guest is co-founder of Grinnings & Low, LLC, a Fairfax City accounting firm founded in 2016. This firm specializes in Virginia inventory and accounting files submitted to local Commissioner of Accounts for Virginia estates and conservatorships. Our guest has an MBA from the University of Chicago in accounting and entrepreneurship, and prior to forming Grinnings & Low, he worked as an auditor for the Fairfax County Commissioner of Accounts for 3 years. Please welcome Brian Lowell. Hi, Brian.
Hey, Richard. Thanks for having me.
Good to see you.
Good to see you
I used
again.
to get letters from you.
I know. They weren't nice either.
They were always nice.
Yeah.
So we're talking about the filings for a conservatorship, and we're beginning with the discussion about the inventory. Basically, the inventory is a way to kind of open the books,
Yep.
if you would, for someone who's taking care of the assets of an incapacitated person. Now on our screen, this is a 3-page form. We're only going to show on the screen page 1, where there's numbered a number of spots where information goes as you start the process. And basically, this information is all going to be stuff that will be available from your certificate of qualifications, typically,
Yep.
when you got qualified. So you have your number 1 would be your file number, then the case number for the fiduciary. What court you are is number 2. The person you're handling the affairs for is number 3. Your name and the date you got qualified. And then for the conservator, it's going to be, they're going to check the box as a conservator,
Sure.
filing the first inventory. And then the last thing is on number 7, that little number there, that's a sort of a self-calculating number as you begin to fill out the PDF fillable form. That just collects all the information there and helps us figure out what your bond should look like.
That's right, yeah. As you start going through the inventory and start entering values, that total will auto-populate.
Okay.
Yep.
Anything special you think we should talk about beyond just sort of identifying that these are some basic things that are going to occur we should talk about?
I don't think so. I think you hit the high points. The top part of the form is really just some basic information, help identify the conservatorship and the form that you're filling out, and that's all going to be on the qualification papers.
Okay, so you do have the papers in front of you as you get started. Now let's get into the actual form itself, which actually is quite extensive. Unlike the estate form. It is fairly detailed. So
Absolutely.
now it's broken up into, I think it's, is it 8 parts?
8 parts of the inventory.
So the first part is the personal estate. So part 1 begins the report with a sort of statement itemization of the personal estate under the supervision and control of the conservator. So what types of assets are reported here?
So this is going to be the bulk of the conservatorship. The bulk of the incapacitated person's assets are typically going to be recorded in part 1. That's your cash, your bank accounts, your brokerage accounts, any cars you might have, any boats, any private jets. I'm sure you might have some. Any
Toy planes, maybe.
Well, speaking of which, if you have a valuable toy collection, that might be put in part 1. Stamp, coin collections, that sort of thing. Any furniture or jewelry of significant value would also be listed here. This is really going to be the bulk of what we consider an incapacitated person's assets.
So that seems to be everything, but are there assets in the name of the incapacitated person that do not go here?
Absolutely. So that's definitely going to, we're going to get, as we get into the other parts of the inventory, we're going to start to see that depending on the ownership of the asset and depending on the type of asset or where it's located, it's going to go in a different part of the inventory. We'll kind of dive deep into each one of those areas.
Okay, so we just keep in mind as you may start out and putting everything here as you begin to fill out this form, but as you go to part 2, 3, and 4, maybe you need to take it off this part and put it in a different part.
Absolutely,
So
absolutely.
What value is going to be should be assigned to these assets as we sort of begin this sort of opening entry of our book?
So it's going to be the fair market value of those assets as of the date you qualified as conservator. So that's the day you became conservator over the incapacitated person. That's the day you went to the court and you got your certification paper. So for bank accounts, it's going to be the cash balance as of that date.
Okay.
For brokerage accounts, for any securities, it's going to be the fair market value of those assets as of that date. And then for any other asset, you just do an appraisal based on the market value.
Okay. Now, what if the asset is encumbered by some sort of a debt? Do we deduct that?
You do not record the debt. Debt does not make an appearance on the inventory form. It doesn't make an appearance on the accounting either when you get into the accounting. But especially on the inventory, if there's some kind of personal loan or encumbrance on it, it does not get recorded.
Okay, good to know.
Yep.
Now, what kind of detail do I need to put for each asset in this section?
So it depends on the asset. If you're talking about a bank account, you're going to identify the name of the bank, the type of account, whether it's a checking or savings account, and you're going to put the last 4 digits of that bank account.
Okay.
So Bank of America, checking number 1234.
Gotcha.
For a brokerage account, it's going to be the same thing, except with a brokerage account, you're actually going to list separately each of the assets that are held at that brokerage account. So JP Morgan, a brokerage account number 0000, and you're going to put Google stock, 100 shares, $5,000.
So if you have 100 shares of stock, you got to list all 100 shares.
You got to list all 100 shares, and then you have to do that for each lot of security that you have in there.
Okay. So that's a good example where you would probably go back to the brokerage house and ask them to do you a statement or report for that brokerage account as of that date.
That's what we recommend. Yeah,
so that
absolutely.
way you can attach that, and it's a good place to start.
Yeah, because the monthly statements you receive may not jive well with the date you actually qualified. So you have to be careful there.
Okay. Well, that's a good suggestion for people to do.
I think so.
Well, let's go to part 2. Okay, that is the Virginia real estate with power of sale. So we have it's being bonded. So this reports all the Virginia real estate over which the conservator has a power of sale. So what types of real estate is reported here now?
So for most conservatorships, conservators are going to have the power of sale, and it's going to be any real estate whatsoever in Virginia, lots of land, houses, what have you. As long as it's in the state of Virginia and you're able to sell it, and your court order should specify pretty clearly whether you're able to sell it, you're going to list that in part 2.
Okay, so if you have Virginia Code 64.2-105 powers,
That's the reference. Yep.
that'll be the one that will give you that power of sale.
Absolutely.
As part of a bunch of other powers.
Absolutely.
Okay. So what if I own the property as tenants in common with somebody?
So that's actually going to be listed in another part of the inventory.
It is?
Yes.
Okay, so it's not, even though it's a fractional share, it's not survivorship, tenants in common.
If you have tenants in common and there's no survivorship, you'll list the actual fractional share of the value of the incapacitated person's interest. If there is a survivorship, right of survivorship in that asset, you would list that in a separate part. So it really depends on the...
I wanted to draw that distinction. So tenants in common is a very different type of ownership than joint tenants with the right of survivorship. So we want to be aware of that. So, so what assets that in the name of the incapacitated person are not listed in part 2? So that's going to be survivorship, TOD, transfer on
anything
death.
that's transfer on death, absolutely.
So we can have some real estate now that can have a transfer on death designation.
Sure, yeah.
That wouldn't really apply yet, but it would apply down the road.
Yeah, sure, absolutely, yeah.
Okay. And then what valuation am I supposed to put on this real estate?
You should just use the tax assessed value. The most recent tax assessed value is typically what unless there's an appraisal that already exists, you could use that, but typically just the tax assessed value.
Okay. All right, so let's go to Virginia real estate in part 3 where I have no power of sale.
Exactly.
Okay. It could be for any number of reasons why I don't have that power. It might be restricted in some way.
Yep.
So what types of real estate is reported here?
So it's exactly as it says. It's any real estate in Virginia that you don't have power of sale, and typically the court order is going to kind of make that clear as well, or it's just not going to tell you that you have the power to sell it.
Okay, so it's pretty much the same type of real estate that I have in Virginia, owned in my name. It could be a fractional interest as a tenant in common. But yeah, I don't have no right to sell it.
Right.
So I own it, but I just don't have any right to sell it.
Exactly.
So I'm not being bonded for it or anything like that.
Exactly right.
Okay.
Yep.
And then do we still again try to use the tax assessed value for
Yeah,
the real estate?
generally you don't have to go out and get an appraisal done. If you have one done, that's great. But generally, you just use the tax assessed value.
Okay. Okay. Well, let's talk about non-Virginia real estate.
Sure.
Okay. So this is part 4 is where we report all that real estate. So again, what type of real estate is reported here?
Anything outside of Virginia. So your beach house in Miami, your vacation home in Europe, anything like that where the incapacitated person owns the real estate, but it's not located in Virginia, you put it in part 4.
What if I own a timeshare?
Timeshares would also go in there.
It would?
Yes.
Okay. So if the timeshare is for a spot someplace, even though I might be able to use it anywhere in the world, if I got it down in Florida,
Exactly.
then I list it in part 4.
Listed in part 4. Yep.
Okay. Okay. And again, we try to use the tax assessed value, but whatever
Sure.
jurisdiction.
Yep. Exactly.
Okay. 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 Part 5. Okay. So now we're getting into where it gets kind of interesting.
Yep.
Property with survivorship or beneficiary designation. So this is where we're going to report all those things that pass by designation of a beneficiary or operation of law.
Exactly.
When the person dies. They're not dead yet, but we want to report what they have.
Yep.
And so what types of properties go here?
So yeah, exactly. Like you said, this is where it gets a little complicated. So any bank account or brokerage account that has a POD or TOD, payable on death, transfer on death designation, will get put in this part 5.
Okay.
Additionally, any life insurance policies, you would put the cash value of that life insurance policy here because those are paid directly by the life insurance company. Really anything, even real estate, like we said, joint tenants with right of survivorship would get listed here as well, whether it's in Virginia or outside of Virginia.
So if the life insurance does not have a beneficiary, so it's just going to go to the estate, still goes here?
Yes, because it would if it doesn't have a beneficiary,
It goes to the estate, so it passes to somebody else.
It passes to somebody else, exactly.
To the executor, I guess. That's how it goes.
Yeah.
And now IRAs, retirement accounts, treated the same way. They have beneficiaries.
If they have beneficiaries listed there, they're going to pass right outside of probate, and they're going to go right to the beneficiaries, and they would not get listed there.
Okay. Okay. And then, so what valuation do we report here for these various assets?
So for life insurance policy, it's going to vary by each one. So for a life insurance policy, it's going to be the cash value of that life insurance policy.
Okay.
For IRAs, brokerage accounts, the fair market value of the assets. For cash accounts, whatever the cash value is at the date. Real estate is going to be the tax assessed value. So it really kind of depends on that asset.
All righty. Now, let's sort of stop for a second. We're already through part 5. Up to this point, where are the areas where most people have the most problem?
I think a lot of people have
part 5.
I think a lot of people have difficulty with brokerage accounts and identifying like the fair market value of each of the assets that are in there. They have difficulty maybe with an incapacitated person's like tangible personal property, so their furniture, their television, what do I do with this? Typically with those sorts of things, you can just lump them together into one, call it tangible personal property on the inventory and give it lump sum value. Unless it's something like a diamond ring that has significant value, you don't really have to list it separately. And then when it comes to identifying the ownership of real estate, they can take some legwork trying to uncover what that is. You might know that they have houses here and there, but you may not actually know what the legal ownership of it is. So that might take some work on your part to make sure you know that he or she owns it with tenants with right of survivorship or joint tenants in common or what have you.
Okay, so that's good to know.
Yeah.
I think, so let's continue on then. We're into part 6, which is an interest in any trust, which I found this kind of interesting because we have a lot of people that have revocable trusts.
Sure.
So what types of property is reported here?
So this is going to be whatever the incapacitated person's interest is in a trust. So they may have set up a marital trust with their spouse, let's say, prior to becoming incapacitated. So whatever their interest is in that trust, so if they have a 50% interest in it, if they have an interest in a payment stream coming from that trust only, you would report the value of that interest on this part, on part 6.
Okay. So if it's a payment stream, do we actually have to value that payment stream then?
So what you would do for a payment stream typically was just write, let's say you receive it $100 every month for a year, you would just put $1,200 monthly income from such and such trust, $1,200 is your annual income.
Got it. Okay. Okay. and that's how it would be reported on the form.
Absolutely.
Okay.
Yep.
Now, Part 7, certain periodic income from the feds. So this is from federal benefits payable to the conservator. So what type of property goes here?
So typically what you're going to put here is Social Security is going to be the most common. Supplemental security income could also be received by the incapacitated person. VA benefits.
Okay, right.
VA benefits, and then I think black lung benefits are also anything basically where you as a designated rep payee have to file a report to that federal agency saying, I received these payments from you. You put in there in Part 7.
Okay. And the valuation that should be reported here, how do we value? Do we do the same thing, do kind of an income stream?
Yeah,
annual
so
value?
if it's like $300 from Social Security every month, you would put monthly Social Security income of $300 would be your actual description of it. And then in the value, you would say $3,600 a year.
So we just basically value the income stream for 1 year.
1 year.
That's what
exactly.
we report.
Yep.
Okay.
Nothing too
At
complicated.
least to get started.
Yeah, exactly.
Okay. Now, and how should this be reported? So you just described that. So when we do the accounting, I'm going to have some questions about that, how I report that as far as assets on hand. That would be kind of interesting.
Yeah.
Let's go to the last section, okay, which is Part 8, which is the periodic income from any other source.
Sure.
Okay, so these are these periodic payments that you get from a host of things, but tell us what types of property we're looking for here.
So this could also be income stream from a federal agency. So you could be receiving retirement benefits from the Defense Financial Accounting Service, DFAS. You might be receiving any kind of retirement income. IRA, required minimum distributions, could be listed here. An annuity, if they have an annuity, you would list that there. And you do the same thing. You would describe where the source of the income is coming from, what the monthly income is expected to be, and then as your value, you would put 12 months or 4 times a year I get this payment.
Okay.
Yeah.
Okay. And then we put down the payor's name so we know who the source is. So
exactly. That's pretty
that.
critical to do that. Yeah.
So let's just say I prepare the inventory. Now, is there any documentation I have to include to support whatever I'm reporting on the inventory form?
So with an inventory, you are not providing supplemental documentation. So you just sign the form and you submit it to the Commissioner of Accounts office. Now, what sometimes happens is if you have a brokerage account with a lot of assets, and let's say the person gets incapacitated and you have a statement from the brokerage house of the date on the qualification date, you can just actually attach that, not as documentation supporting the values, but actually just to function as an itemized list in case you don't want to type them up again.
Right, and I think that makes a lot of sense. I think that's a great suggestion for folks to take advantage of. And that way they've described it correctly.
Yeah, exactly.
And all the other than you want to make sure that you only give the last 4 digits of the brokerage account.
You can just kind of black that out if you need to.
Sure. So let's just say, we do the inventory, we file it, but then we discover some more assets, or we discover that we put the wrong value down, or whatever it might be. Can I correct the inventory?
You can. So you can file an amended inventory that restates assets. If you put, like I say, you put real estate in Part 2 that should have been in Part 3, you can correct it. If you have joint tenants for one piece of property that you didn't know was there, you put it in Part 1, you put it in Part 5, you can just go ahead and correct that inventory. In some cases, you can make a correction on the accounting itself. And so it's best to always talk to the commissioner's office if you're unsure what to do. You don't want to keep sending corrected inventories constantly.
Right.
But if you think you made a mistake, depending on the magnitude of the mistake, it might be worth filing amended inventory, or it might be worth adjusting on the accounting, and it's best to kind of consult the commissioner's office on what they would prefer to see.
Okay, so different commissioners approach that a little bit differently.
Yeah, and it also depends on the error itself.
Sure. Okay. Well, that's important. Communication with the commissioner's office is not a bad thing. It's a good thing.
It's a really good thing. I highly encourage people to do that.
Sure. Well, let's just talk about, we sort of come back again as we sort of look back, okay? Anything more you want to add as far as the most common problems that you see as an auditor when you're dealing with these inventories?
I think the most common problem that I see is people neglecting to identify the asset completely. So they might forget to say it was a savings account or a checking account. That's important to know. They might forget to put the account numbers on it. They might just say, well, I have a Goldman Sachs brokerage account, and not say what's in it. And so that's actually important, because just saying what account it is isn't enough. You have to really identify in detail and itemize each of those assets that are held within there. So it's always, or let's say you have a Honda or a Toyota car. They might just write 2012 Toyota, $5,000. You need to say the make, model, and year of the car, or boat, or what have you.
So it gives some basis that someone could go on and do a Kelley Blue Book search just to kind of verify that makes sense.
And if there's any issues with those assets, especially if you have assets that are similar and things are getting distributed when an estate gets opened, it's really important to identify things really clearly and distinctly so that they're easily tracked, because that's ultimately what's happening here, is we're tracking assets.
Okay, right. Basically, again, the inventory is your opening entries in your books as a conservator. So
Absolutely.
We put a dollar in, we got to find that where that dollar goes.
Exactly.
All the way through to the end.
Sure.
Well, let's talk about this is a what appears to be a not super complicated form, yet there's a lot of detail that go into it. And of course, the important thing is to make sure you get things in the right spot.
Exactly.
Any words of advice you want to share with our viewers about responding to commissioners' offices when they say this is not right and they get a notice?
Yeah. I think the first step to do is pick up the phone and contact the auditor that sent you the notice, and just make sure that you understand why it's not right, or why the auditor thinks something's not right. Mm-hmm. Most auditors are happy to walk through what they think is an issue, and it may be that you're doing what you thought was the right thing, but you messed up, and that's okay, and they'll kind of guide you through how to correct it and what's the best course of correction.
Okay.
So I think phone call, communicate, over communicate with the commissioner's office whenever possible. Pick up the phone, send them an email, go in person, sit down with them if you have to. As an auditor, I used to sit down with countless fiduciaries and help them understand problems, and most auditors are more than happy to do that, and actually prefer to do
with an appointment.
With an appointment.
We don't do walk-ins. That's not a good idea.
It's generally better to set up an appointment.
Sure. Okay. Well, look, this has been really fascinating. How about some final thoughts or suggestions you want to pass along to viewers or want to emphasize about the preparation and filing of the conservator's inventory?
I would say to any fiduciary that's preparing an inventory for conservatorship to be careful, to take it very seriously. It looks like a simple form. It looks like you're just filling out a form and filing it with a government agency, but there's actually a lot of complications, and if things go unchecked or unnoticed and an error creeps in, it could really screw you up down the road. So if you're not sure about something, reach out to a professional, reach out to the commissioner's office, ask them for guidance. They're more than happy to, and help you understand what are the critical elements to filling out this form.
Brian, I tell you, this has been great. Great detail, especially from someone who was hands-on and been dealing with this, for several years at the Commissioner's Office. So appreciate you taking the time and sharing this information. Great public service.
Happy to be here, Richard. Thank you so much.
You're very welcome.
Alrighty.
Thanks again. Being a conservator is an awesome responsibility, and I thank you for your commitment to serve in this role. However, with that responsibility comes a host of initial obligations, one of which is to properly complete and timely file an inventory with the local Commissioner of Accounts. The show this evening should help you properly complete the inventory, and when you have done it, please be sure it is timely filed. Sounds straightforward, but I would be remiss if I did not add these words of caution about what not to do. Do not ignore this initial filing obligation and deadline. Do not ignore notices from the Commissioner that you need to file the inventory. Do not ignore notices from the Commissioner that the inventory you filed is not acceptable. Ignoring these notices will cause a host of problems and could jeopardize your right to continue to serve. If you need to respond to a notice from the Commissioner regarding the inventory filed or not filed, we strongly recommend that you consult with an attorney or an accounting professional experienced with this conservator filing. They can help. The Commissioner will appreciate that you got advice to sort out whatever the issue may be, and you can continue to drive the living probate train for your loved one. This brings us to the conclusion of our show tonight. We hope you found it helpful. Replays of this show and all the shows broadcast to date, along with other helpful information, can be viewed on the Probate Nation website. On behalf of the Probate Nation, thank you for visiting with us.